Prime Minister Anthony Albanese heads to NATO as Trade Minister Don Farrell dashes to Brussels to save the EU-Australia free trade deal. Another strong weekend for auction results. And chocolate lovers beware, there's a crisis in the industry which will push prices much higher. It's Monday, the 10th of July, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you're speaking today with Josh Gilbert from eToro, one of our kind of regular guests, isn't he?
I think so. Look, it's all about tech stocks, and particularly we go into some detail about Apple and Tesla, not just what they've done, because they've had an incredible run in 2023, but also what the outlook for those stocks are like and also what people are investing in. Great chat for anyone who's interested in investing.
Yeah, sure is. It's coming up a little bit later on. The main story this morning, though, Sean, it is a big week for Australia in international politics, with Prime Minister Anthony Albanese travelling to Lithuania for the NATO summit and Trade Minister Don Farrell making a dash to Brussels in an effort to save the flagging European Union-Australia free trade deal. Do you reckon they share a flight going over?
Probably. They're going actually, I think Don Farrell went a bit earlier than Anthony Albanese. Anyway, the war in Ukraine, which is now more than 500 days old, will rank highly among the issues on the agenda at the NATO summit. And yesterday, Education Minister Jason Clare said that the Prime Minister had been very clear that there's more support for Ukraine to come from Australia. We might hear something about that. Mr Albanese will meet with German Chancellor Olaf Scholz in Berlin tonight before attending the NATO Leaders Summit in Vilnius from tomorrow. Albanese said it's important that he attend the NATO Leaders Summit, saying it's firmly in Australia's national interest as we work towards a peaceful and stable world.
And it seems as well, Sean, that NATO's push into the Indo-Pacific region will also be a topic of discussion. Probably needs a bit of explanation there.
Yeah, so NATO stands for North Atlantic Treaty Organisation, and the Indo-Pacific is a long way from the Atlantic. NATO wants to open a liaison office in Tokyo and has invited Australia, Japan, New Zealand and South Korea to the meeting this week. That's, of course, all about rebuffing China, but French President Emmanuel Macron opposes opening the Tokyo office, which would be a long way from the Atlantic if they did open it. Former Prime Minister Paul Keating agrees with Macron and, in his typical colourful style, said the region, as in our region, welcoming NATO would be a case of Asia welcoming the plague upon itself, given hundreds of years of intra-European conflict and US militarism. He kind of has a point. He just puts it better than everyone else.
Oh, he certainly does, doesn't he? And we mentioned Don Farrell and the fact that they didn't share a flight over. What exactly is he doing over there?
Well, Farrell, who reportedly cut short an overseas holiday over the weekend, is on the way to Belgium to attempt to break a deadlock over the free trade deal. He said negotiations could continue through the rest of this year in an effort to close that deal. He concedes that negotiations remain difficult. Not surprising he's so keen to get on with it, though. The EU is Australia's fourth largest trade partner, accounting for about $90 billion worth of trade, or 8% of our total trade.
All right, it's going to be a big week. How did local markets perform on Friday?
It was a tough day for the S&P ASX 200, which finished down 1.7% to 7,042 points. Okay, we're only 5 days in. Might be over-egging this one a little bit, but the share market is having its worst July in 12 years. Ask me in a week, that might not be the case. Fears of higher interest rates and a recession in the US really has spooked investors globally. Friday was a pretty awful day, led by the tech stocks and interest rate sensitive sectors like the real estate and consumer discretionary companies. All the market sub-indices dropped, as did about 90% of those listed on the ASX 200. The share prices of some big and well-known companies fell really sharply, led by Afterpay owner Block, industrial property company Goodman Group was off around 4%, Gold Digger Northern Star Resources, James Hardie Industries and Treasury Wine Estates all fell. Some of the energy companies were probably among the better performers. All in all, though, a bit of a shocker on Friday.
Yeah, sounds like it. What about international markets?
Well, there was some softer than expected US jobs data out over the weekend, but it wasn't enough to lower expectations about the US Fed lifting interest rates later this month. That's dominated Wall Street and the major indices, the S&P 500, the tech-heavy NASDAQ, and the Dow Jones Industrial Average, which basically measures the top 30 companies in the country. They all fell over the weekend. Fears of higher rates also led to a sell-off in the bond market. So we had the situation where both equities and bonds went backwards. Now, that's not supposed to happen. It happened a lot about 12 months ago, but most market watchers hoped that was a blip, wouldn't occur again. Again, very early to actually make any call on that one, but the next few weeks are going to be very interesting. Michael, in commodity markets, oil prices are up sharply in recent sessions, and certainly where I live, there are service stations charging more than $2 a litre. Don't like that. There are also service stations, though, charging about $1.70 a litre. So shop around. The Aussie dollar is buying around 67 US cents. And Michael, you mentioned it at the top of the show. There is a crisis coming in the world of chocolate. The price of cocoa, the main ingredient, has hit a 12-year high as heavy rains across West Africa accelerate the spread of a rot-causing disease. Now, farmers in Ivory Coast, Ghana and Nigeria have reported signs of black pod disease. The disease causes cocoa pods to, turn black and rot. Cocoa prices are more than 40% higher than a year ago. The global price of sugar is also at its highest level since 2011. Chocolate is surprisingly price elastic. Now, that means a change in price impacts consumption significantly. In fact, research by the Bureau of Statistics earlier in the year, reported in the Financial Review, says that a 1% increase in chocolate prices causes a 7% drop in consumption. I don't believe it, but it is from the Bureau of Statistics, so we better give it some credence. Clearly, prices going up and down does affect chocolate consumption. And the bad news is prices are going up.
They need to come and check out our house. Changes in chocolate prices has never once limited the amount of chocolate that flows in through this store. So you know what? I'm going to remain skeptical about price elasticity, though I am pleased to have learnt a new term, Sean.
Yes, price elasticity. Tell me, what's your favourite chocolate? Like, my mother always loved Toblerone. That was what it was all about. But I have one which I just go back to again and again.
Oh, it's hard to go past like good old-fashioned Top Deck for me.
Oh, really? I don't think that's old-fashioned because I don't think Top Deck really was introduced till about 25 years ago.
Oh, well, it's more old-fashioned than like there's some other really good ones that have kind of got also Old Gold with peppermint in it.
Oh, really?
Yeah. Yeah. Old Gold with peppermint and anything with peppermint, actually. So you know what? I'm going to – what's the saying that politicians – I'm walking back from my Top Deck statement and I'm now kind of going all in on peppermint Old Gold and anything with peppermint in it.
Okay. I get that. Big Caramello fan as well. Nothing, though, beats Rocky Road.
Oh, no, that's so subjective because sometimes there's nuts in it, sometimes there's fruit and various kind of cherries and things.
Darren Lee, Rocky Road specifically, I've got to say.
Oh, okay. All right.
I agree. There's just not enough uniformity in Rocky Road.
Yeah, no, it needs one universal recipe and nothing else can be called Rocky Road. Like, unless it's actually specifically that, it must be called like Bumpy Path or something like that.
Go on.
All right. We'll be back in a moment with the rest of the day's business news. Sean, 3/4 of homes listed for auction last week sold as clearance rates remain high on the back of low levels of listings.
The number of listings last week dropped more than 8% and were 13% lower than a year ago, probably due to school holidays and higher interest rates. But anecdotally at least, prices are pretty good. Overall, the preliminary clearance rate... Do you know, Michael, when we do these stories, I always struggle with the phrase preliminary clearance rate.
I know, and it's always a thrill for me to see if you're going to get through it.
Can you say it for me? Just so that...
Yeah, the preliminary clearance rate.
Yeah, right up. The PCR across capital cities jumped 4.2 percentage points over the past week to 74.5% from about 1,400 auctions. Now, Sydney's clearance rate was 75.6%. Melbourne was almost 73%, while the Reserve Bank refrained from lifting interest rates last week. Most market watchers do expect more rate hikes in coming months, unfortunately.
Yeah, and on that subject, Sean, research group Roy Morgan has found the number of Australians already struggling to make home loan repayments has surged by 627,000 over the past year. That's to an estimated 1.43 million borrowers. That's a lot.
Yeah, it's pretty incredible. It's almost 30% of all mortgage holders, the highest number in 15 years. Roy Morgan also predicts that an additional cash rate rise will leave an extra 51,000 home loan borrowers struggling to make repayments.
Yeah, that's a bit scary. Now, Sean, 52% of Australians say they will vote yes to alter the Constitution to enshrine an Indigenous voice to Parliament later this year, while 33% say they will vote no, and 15% are not sure.
And migrants and younger Australians are more likely to vote yes in the upcoming referendum, according to the Australian Institute. 73% of 18 to 29-year-olds say they will vote yes, while among the 50 to 59-year-old cohort, 40% will vote yes, 40% will vote no. More than half of Australians aged over 60, so 51% of them, will vote no. Incredible numbers.
Yeah, really interesting. Now, just recapping the big news on Friday, and we talked a bit about it on the weekend edition as well. Senior public servants will be referred for civil and criminal prosecution over the unlawful robo-debt scheme following the release of the Royal Commission report into the scheme on Friday.
There's been plenty on this over the weekend, just revisiting exactly what happened. Robo-Debt Royal Commissioner Catherine Holmes delivered a 3-volume report with nearly 1,000 pages, 57 recommendations. There's also a sealed chapter that isn't part of the bound report. It recommends referrals of individuals for civil and criminal prosecution. The robo-debt scheme unlawfully raised $1.76 billion in alleged debts from nearly 400,000 Australians. Generally, they were very low-income Australians. Commissioner Holmes was critical of the incompetence and cowardice of former ministers responsible for the scheme. The Royal Commission found that a number of people who were pursued for debts died by suicide, and it was critical of former Prime Minister Scott Morrison, former top bureaucrat Catherine Campbell, and former ministers Alan Tudge, Stuart Robert, and Christian Porter. Among the Robo-Debt Royal Commission report recommendations is for an overview of cabinet in confidence rules regularly used to keep information secret. Still a long way to play on this. We should also add that former Prime Minister Scott Morrison refuted most of the claims or allegations that he hadn't acted in the best interests. So we should add that in, but certainly more to play on this one.
Yeah, certainly is. Now, Sean, new national standards and accreditation rules will be developed by the end of the year after a review led by Sydney University Vice-Chancellor found that universities are failing to equip teachers with the skills to manage classrooms.
University of Sydney Vice-Chancellor Mark Scott said being a teacher is a highly complex and demanding job. The new standards will focus on teaching core content in university education courses. Scott said the education system needs to do a better job helping teachers to learn skills, but also to be resilient. Unless they do that, they just won't be able to keep teachers in the classroom.
Now, opposition leader Peter Dutton was again talking up the merits of nuclear power on Friday, saying Australia's growing energy demands could be met cost effectively by building small nuclear reactors on the site of ageing coal-fired power plants and using transmission systems that are already in place.
Dutton accused Federal Labor of being mesmerised by the glare of solar panels and wind turbines on Friday and failing to seriously consider the opportunities of nuclear power, including to lower household energy bills. He also wants a major boost for lucrative uranium exports and disputes climate change and Energy Minister Chris Bowen's criticism that nuclear is the most expensive form of new energy. Dutton says 50 countries are investing in nuclear, so it must have some attraction. Mind you, so far there is absolutely no sign that the Albanese government is interested in nuclear.
Sean, we talked last week about changes in banks and the fact that banks really just aren't carrying as much cash as they used to, and you have to ring ahead if you want to withdraw some money. A little bit of good news for bank users. Commonwealth Bank has decided to leave hundreds of its regional branches open for at least 3 more years ahead of a Senate inquiry resuming next month.
The country's largest lender in February paused regional branch closures while the Rural and Regional Affairs and Transport References Committee examined how exits are impacting communities. Commonbank has the country's largest branch network with about 39% of its 807 branches and service centres located in regional Australia. It closed 68 locations in the last financial year. Now, Commonwealth said the decision to keep branches open is in line with its commitment to provide customers with a wide range of flexible banking options and locations. That's according to a report in The Australian. Hearings on the impact of bank closures on rural communities are set to resume next month, and the inquiry committee has asked lenders to pause closures until the end of the review in December.
Okay, turning to international news now, and Elon Musk has sued the law firm that led the court fight to make him complete his takeover of Twitter, saying it took advantage of the company while running up a $90 million bill.
Ah, yes. So Bloomberg is reporting that Wachtell, Lipton, Rosen and Katz, among the most profitable firms in the US, exploited a brief vulnerable period just as Musk was closing the $44 billion Twitter deal. That's according to a complaint filed in San Francisco State Court by Musk's ex-corp, which is now parent of Twitter. Twitter had agreed to pay Wachtell lawyers on an hourly basis to enforce Musk's agreement, because remember, he was trying to step away from his offer. So Wachtell was being paid on an hourly basis to enforce Musk's agreement to buy the company, but the firm violated its ethical duties as well as California law in the final days of its 4-month representation when it solicited gargantuan bonus fees, according to the complaint. Now, the lawsuit is something of a role reversal for Musk, who's a defendant in many suits alleging that Twitter, under his leadership, allowed millions in unpaid expenses to pile up from former employees, vendors and landlords while purportedly trying to keep the company financially solvent.
You sound exhausted just even by talking about Elon Musk on day one of the new week, and he's already headlining our international news. There's a lot of Musk lately.
There is a lot of Musk, and there's so much money spent on lawyers. So this is basically the guys who are trying to force him to do what he said he'd do, and now he had to do that, so he took over Twitter. But of course, he gets lumped with the bill, and he doesn't like it. Anyway, whatever. Moving on.
It's a good story, though.
Yeah.
Sean, one last one. L. Catterton, the private equity firm backed by luxury French fashion house LVMH, is considering strategic options for Birkenstock, the shoe brand, including an initial public offering.
Have you ever worn them?
Yes. Well, they're not mine. And this is, we're getting into confession time here, aren't we?
Yeah.
On occasion, when I have to take the bins out, the most convenient thing to wear are Sean's Birkenstocks, which are sitting near the front door, and I will wear them. And on occasion, I then continue to wear them for the rest of the day because they're so darn comfortable.
So are they? So this is the thing. I've just bought a pair of Birkenstocks because, as you know, I'm going away in about 6 weeks or so.
Oh, really?
It turns out I am. Anyway, Jackie suggested I buy Birkenstocks because they're so comfortable. Now, I'm trying to wear them in, shall we say. I've never had them before. My kids just sort of laugh at me. I haven't quite got the comfort factor yet. I've never run into anyone who says just wear them in because they are spectacularly comfortable, but I'm just not quite there yet.
No, the trick is, as I have done now, is you should get Jackie to wear them in for you, and then you just take over once they're nice and comfy and soft and really kind of pliable. You go for it.
Okay, good. So the iconic German sandal maker could be valued at more than $6 billion. What's that? 9 billion Aussie dollars in an IPO, according to a report on Bloomberg. I mean, that's a lot of Birkenstocks. Mind you, they're very expensive. A couple of $100 for a pair of Birkenstocks. Anyway, a transaction would come more than 2 years after the private equity firm and the family investment company of billionaire Bernard Arnault acquired a majority stake in Birkenstock, valuing the group at nearly $5 billion. Brothers Christian and Alex Birkenstock still retain a stake in the firm, though. Interesting. Good on them.
Yeah, good on them. You know what, Sean? I'm going to have to just put up the white flag here. I've been thinking the entire time you've been talking. There's a pun. There's something here to do with they own a lot of Birkenstock, a lot of stake, a lot of shares, stock, Birkenstock, and all I came back to is if you wear socks with them, are they called Birkensocks? And that's all I've got. So I feel like today, at least, I have failed, and I apologize.
No, that was actually pretty good.
All right, I'll take that. Up next is the Fear and Greed Daily interview. You're speaking with Josh Gilbert from eToro.
That's right, all about tech stocks, particularly Apple and Tesla.
Yeah, it's a really good chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And we also, of course, have Fear and Greed the week ahead, which is coming up with our resident economist, Stephen Koukoulas, who is excited about a couple of things this week, including a speech from the Reserve Bank governor.
Yes, Phil Lowe is speaking later in the week. We've also got consumer sentiment figures out from Westpac Melbourne Institute. We've got the National Australia Bank business sentiment. We talked to Stephen about what's going to happen to rates, what happened last week. As always, enthusiastic as ever, Stephen.
He certainly is. Thank you very much, Sean.
Thanks, Michael.
It's Monday, the 10th of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.